again, the idea, is that, anytime someone looks to buy, they have to look at what they have going out versus what they have coming in terms of cash flow, what the credit looks like, what their employment looks like. But one of the factors, and I saw this is kind of a segue. I'm going to do a segue better than Arnie.
Wow.
Yeah, this is going to be a smooth.
That won't be tough.
This is going to be smooth for any of you that watch The Walking Dead. If anyone watches The Walking Dead, this is a dolphin smooth transition. If you guys don't watch the show, you probably don't know what that means. But dolphin smooth transition and segue into adjustable rate mortgages versus fixed rate mortgages, because a lot of people assume, adjustable rate mortgages are bad. They're risky. All this kind of stuff. But historical studies have shown that the majority of the time people pick adjustable rate mortgages, they're actually the right call, depending on how long you're going to be in the property. But a lot of people forget about them. They looked only at the fixed mortgage costs, when in reality it may give them more buying power.
Yeah, you have to, if you have a game plan and you know what you're doing, and you can figure out your break-even point very easily on a fixed rate versus an adjustable rate. And I think it's prudent to maybe be a little conservative and maybe take a couple worst-case scenario kind of, calculations into it. But overall, it's something to definitely consider. There's no reason not to look at it. But let's just be smart and make sure we're putting you in the right product.
Yeah, and I think a lot of people, because of the downfall of a few years ago, everyone said, the adjustable rate mortgages and all that were the reasons why the economy crashed, and everyone looking for a scapegoat. In reality, they weren't. The reason why was because of relaxed underwriting that made it really easy. Because there are lots of smart financial people that go the adjustable rate path because they save money, because the rate adjusts down with the market. They get a fixed period of time before their rate adjusts, but they save a lot of money doing it that way, and they can get into. And I think especially it can be a useful tool when prices are going up.
The problem previously was layer upon layer upon layer of different things, whether it was short-term fixed rate mortgages to no income verification to no asset verification to relaxed underwriting guidelines. There was 1,000.
And then obviously there was all kinds of mortgage fraud. There were unscrupulous realtors. There was never, the downturn that we saw was not just the responsibility of any one segment, any one product. It was just an overall just collapse. And so, but in reality, for long periods of time, fixed rate mortgages or adjustable rate mortgages have been a great staple product for certain people, depending on how long they're going to stay in the property, how much equity, how much money they're putting down, and of course what the rates look like.
And it's funny because I think it got a bad rap because a lot of the subprime mortgages were in adjustable rate mortgages, and those were 2-year subprime mortgages, and so that's a bad combination.
Yeah. So a lot of people assume all adjustable rate mortgages are like that, but in reality, a lot of them are. You get a several-year period with a lower initial rate, and then your rate adjusts, but it doesn't adjust like with some gargantuan adjustment, which is the downside of what happened a few years ago. Was some of the adjustable rates were going up astronomically above prime.
Absolutely, and yes, you can get a fixed rate mortgage at 10 years right now. So 10 years to be fixed. And an adjustable rate mortgage is, it's pretty safe.
Because the likelihood is you're going to do something before that 10-year period.
Exactly.
And where you get those astronomical jumps is where you pair an adjustable rate mortgage with an interest-only mortgage.
Correct.
And so when it adjusts, it then also pulls in principal, and that's where payments just skyrocket.
So it just makes sense to really talk about your situation. Hey, what are you planning on doing? Is this going to be a 4-year thing? Well, then maybe you should consider a 7-year mortgage to be conservative. Let's not, I know I'm going to be out of this home in 3 years, so let's get a 3-year adjustable mortgage. You could do that, but let's just look at the 5-year, look at the 7-year as well, and just make sure that that's the right option.
Well, you and Arnie made a good point last week, and it kind of goes with what Sean just said. It's about mortgage planning. It's really about having a plan, because anytime you talk to a mortgage lender, and the very first thing they say, before they even know your situation, know what you want to do, they start talking about rates and fees about a particular program. Right. That could be because they make more money, getting you into that program. You want to work with a lender just like Waterstone and David and Arnie that's going to sit down, get a game plan, figure out what your costs are going to be, and what program looks right for your situation.
Right, and that's going to be through just, conversation, talking. Let's talk about your goals and figure out, what exactly you want to do here.
So, and I think that's important. A lot of people don't realize the importance of, I think, going local with a mortgage lender, because a lot of times you're going to have, I just feel like you have a better connection to the lender. The lender has a better connection to the realtors involved. has more pressure to do a good job, whereas the online lender that's quoting somebody, crazy low rates isn't going to spend the time to find the right solution most of the time.
You can come knock on my door and give me a couple slaps, but you can't do that to the guy across the country.
That's right. That's a good point. A couple of slaps. I don't know. That sounds a little intense. I know we won the kickball tournament.
Yeah.
But I don't know if we're getting violent.
Is that a 24-hour policy?
Yeah.
Related to a mortgage?
I mean, it hasn't happened yet. We haven't done anything yet, but of course, if somebody that's across the country that's just quoting a random, rate, you have the stress about getting to the closing table. Are the numbers going to be correct, or is this company going to fold? Before it happens, because that's what happens. Bait and switch. I think with all these internet companies, I think you've experienced it, and we've seen it.